What's up, guys? Happy Wednesday. We are at nearly 1 p.m. And so we're going to go live. We are live already. Those of you that are here that are live in the webinar, let me know if you're here on Zoom, comment in the chat. If you're over on Facebook and I am streaming this into our Facebook group, into the FFF group, you can Zoom in with us. The link should be there in the comments. If it's not, someone from the team, Evan, ought to be posting it, and then we can have you guys migrate over here and help shape the discussion, because today especially I'm going to look for a lot of engagement from you guys, because I'm going to be qualifying markets, your markets, ideally. And so I'm going to need some feedback from you. I'm going to need you to tell me where to go, how to navigate Zillow, and I'm going to show you how we think through the qualify a market exercise. And we've done similar trainings before. We still seem to find like a disconnect with a lot of folks trying to wrap their heads around, hey, how do I make sure that the market I'm in qualifies for the forced appreciation model? It's typically the question we get hit with the most on the phone when we connect with folks for our accelerator program, which, by the way, we just closed the doors on yesterday. Shout out to KJ, Hussein, Nelson, a bunch of folks who have come in and joined the fold, joined the collective. And I was actually just on the phone with two of you guys this morning, qualifying markets, going over deals, doing some analysis, and then giving them the direction that they needed to get to work and start doing these big deals in their markets. So super psyched. Want to definitely shout those folks out. And as the rest of you trickle in, again, let me know you're here. Let me know you can hear and see me in the chat. Drop a zip code or a county that you're either actively farming or considering farming, marketing to for your next fix and flip. Because like I said, we're going to jump into a screen share and I'm going to want you to help me drive. Yeah, great. Okay. Looks like we're here. Monmouth, Essex. I see a lot of my Jersey peeps, which is good. Clearly, we know those markets and counties really, really well. So we'll be able to use those as examples. But again, my intention is to jump around a bit. I have a few queued up just because I've had a lot of these calls with folks from the Fix and Flip Foundation group. And like I said, it's the question we get hit with most often. And so we've done screen shares on this. We've done Zooms on this. I've recorded Looms on this, right? So let's hit it. I'm going to jump right into a screen share. No slide deck today. So it's going to be me driving from Zillow. I'm using a tool that everybody has access to, right? So no excuses. You can't model or you can't find deals because you're not an agent and you don't have MLS. That's all rubbish. That's a fabrication. That's an illusion. That's a limiting belief. I'm going to show you that you can do all of this with Zillow, which every single one of you has. Sure, if you then have MLS or have somebody in your network that has MLS access, you can go deeper, but you don't need to do this, okay? Oh, awesome. We got a ton of folks commenting. So let me make sure that I jump into a screen share, but also at the same time, save the chat so I can see that and I can have you guys kind of direct how we work through this in Zillow. You're likely going to see a pretty busy looking Zillow. Let me know if you could see that on the screen. I'll open the chat back up. And of course, when you move Zillow on the map, things get a little bit squirrely. So it's going to be tough for me to highlight things. So if you're on desktop, you should be able to keep up relatively well. If you're on mobile, this is going to be especially difficult. You'll understand the premise, but you're going to have some challenges keeping up with the screen share piece. So let's open the dialogue, hold, and we're going to jump into a county, and I'm going to talk you through how I think through looking at whether or not a specific market makes sense for forced appreciation. And so I see a bunch of folks, the Morris, Essex in Jersey, Carbon County in PA, Greenville County, South Carolina, Dover in Delaware. And I don't know if, yeah, Ed, okay, I see you, Dover. So cool, let's do it. All right, so we'll back out of Zillow, assume you just walked into Zillow and you wanna check out, I'm queued up to do Greenville because I just did this. Greenville, South Carolina. So I've committed to doing this for our friend Miles. And so I'm gonna show you and him how we think about this, right? And so clearly you guys are gonna know your markets more intimately than we would, right? But we can do this all over the country from our desktop. And so you're gonna know the zip codes and the specific municipalities inside of the counties that you wanna farm, right? Farming an entire county is aggressive, right? And there are people that do this at scale that can and do it. What I would suggest is you get hyper local, hyper targeted, focus on 3 to 5 max municipalities, cities, towns inside of whatever county you're actively farming. And depending on the size, right? And I'll show you a couple of examples where the town isn't large enough to warrant being the only town you focus on. So you start kind of just pairing some other smaller towns on there to get to a threshold that makes sense to actively market and farm. Hopefully that's clear, right? So you don't want to just be like inundated by farming an entire county, Middlesex County in New Jersey, or Greenville County in South Carolina, right? Or I don't know how large some of the counties, Morris County, right? Like these are far too large to actively farm. So that's one end of the spectrum. On the other end, there might be a small little town that has a total of 1,000 mailable addresses. That's going to be too small to farm, right? Like you can't just farm that, and you can't also farm the entire county, but you could choose 3 to 5 towns in the county that add up to a critical mass that makes sense. And I think that's got to be at minimum somewhere like around 500 or so active addresses that you could be mailing to, that you could be cold calling, that you could be door knocking, that you could be sending ringless voicemails, whatever your preferred outreach method is. Okay, so we take a look at a county, it's clearly very big, right? And you do a little bit of zooming, and so this is not our market. We're not familiar with this market. So everything we're doing and learning alongside you using Zillow. And so I'm looking at all the different towns, and I'm looking at a bunch of red bubbles. I'm looking at what homes are for sale, and I'm looking at the deltas between the sale prices, the asking prices on homes. So I happen to have a list of zip codes in Greenville County that one of our students has provided us, and I'm going to use those to drive what we're doing here. But first, I want to show you the county at a high level. Then we're going to start snagging some of these zip codes. We're going to be opening these. I'm going to leave this open so we can refer back to it. Then we're going to drop some of these in. Hopefully my Zillow cooperates. So this is the practical implementation of the qualify a market exercise. That's what you guys are watching happen in real time. We'll pull 3. That's plenty for us to take a look at already. Right. And so I could have preloaded a lot of this, but I want you to be watching this happen. So aside from having been introduced to this area, having had a preliminary conversation with one of our students, this is about as far as I've gone. I've looked only at these maps once before, and now we're going to really dig in. So we're thinking, we'll save another Zillow window. Okay, so we're wondering in Greenville, South Carolina, can I do forced appreciation? Can I add square footage, add levels, additions? Can I do new constructions? Can I force appreciation by creating square footage where there isn't any yet, in turn driving up the values, making fat spreads on out sale? So we're putting in individual zip codes in the county, and then we're looking at what it's yielding us, and we're looking for deltas So I'm zooming in just to make this more legible. And we're trying to find these deltas in the sale prices. You could be doing this with for sale or solds, right? And you should do it with both. But for the purposes of this exercise, I want to be looking at for sales because I want to see how much inventory there is. Solds, you can then narrow it down and be looking at just like what's traded in the last 6 months. And we will, but for the purposes of this, here's how you get started. You jump in, you put in the zip code. You want to know, is Greenville, South Carolina proper a market that I want to actively farm? And so we want to understand, where do things trade? Where can I go in at? And then where can I get out at? And if we're going in at 300, we want to see exits at or around 850. If we're going in at 400, we want to see exits at or around 1 million. This is that litmus test. We need to just know that this makes sense before we go any further, because if all we see, and what you're looking at here are pretty significant deltas, right? You're seeing things in the 3s, 4s, and 5s. Then you're seeing things in the 1s, and then you see anomalies in like the 2 million, the 4 million, right? Those are probably on the tail end. Those are anomalies. Those those are not part of our sample set. We're going to kind of probably kick those aside, but I just want to first talk you through the mindset, how we think through this. And so we start clicking around and we want to see new construction at 600. This isn't what we're going in at, right? This is an exit for a new construction. We're trying to find like, what do you go in at to buy to then ultimately outsale? We want to see what these numbers can get us. And these are all refreshed homes, right? So we're trying to find something dated, something that's a fit for the model. It's got to be beat up. Ideally, it's a 1950s or 60s, hasn't been updated. So I'm starting to get a sense that this is an active new construction market. So for example, this one that we just saw, we want to try and get a handle on, what did they buy before they built this? What was here, right? And sometimes you'll see it in the price history. You'll be able to see what was paid. And this looks like it was listed for pre-sale. And then ultimately they decided to build up and then listed it at 895. So I'm not seeing anything that's telling me that this is like an add a level or addition style market. I'm seeing this is more of a new construction style market, where if you can buy the dirt for the right price, you can build, right? Like these folks wouldn't be building new construction here if there wasn't demand and if the numbers didn't work. In fact, we clicked on this one that's for sale. This doesn't look like new construction, but right next door does, if you guys can see in the image. So it looks like this is a hot new construction market, not necessarily an add a level or addition market. More new construction, right? So this is telling me that I want to think about this market a little bit differently. I want to be looking at, what can I buy dirt for? And then what on out sale can I get per square foot? And there's plenty of comps here for that, right? Like we can do a lot of this and we can figure out what the market will bear. Question from Jose. What do you mean by delta? That's a good question. So the delta is the difference between where we buy in at and where we sell out at. And so we're looking here for big deltas. We want to see properties trading in the 3s, and we want to see properties trading at 1 million. That, like, we want to see properties trading at 400s and then properties trading at over 1 million, 500s, and then 1.25. We want to see that the properties on the way out sell for 2.5 times what we would pay going in, right? That's that multiple we're always looking for. So for example, I'm trying to find a comp, but this isn't that kind of market, right? Like we're going to come away from this likely thinking that new construction is the play. For me, looking at zip code 29601, I don't see a place where I would just add square footage. I wouldn't go back and up on existing structures. I would be looking to secure dirt cheap that I could build on, because clearly there's demand for new construction. They're standing these new construction projects up and they're trading in like the mid to high 4s and 5s. And so I would want to know, can I buy dirt at 150, right? Like I want to buy dirt for about 1/3 of what I'm going to sell for. And so if I'm going to sell at 500, I need to be buying the dirt for 150, because that that rule of thirds that we've talked about before on these calls, a third for the dirt, a third for the construction, a third for your profit. So let's jump to another zip code. I want to make sure we make time to jump around a bunch. So you get a bunch of different samples, right? A bunch of different data set. So you can kind of think through this, and then you can go back into your market. If we don't get to your market today, you can go back into your market and play with this and kind of test this out. Jose, let me know if that provided some additional clarity on the delta and what we're looking for. Excuse me, as I hydrate. So let's see what things look like in. Oh, we had jumped to a New Jersey zip code. That's not what we were looking for. We want to stay in South Carolina, 29607. So there's more activity here, right? I'll zoom in a bit. I want to see what's trading for $1 million, $1.2 million, $1.5 million, right? I'm looking at the upper bound of what the market will bear. These are big stately homes. Yeah, big stately style houses, not the type of stuff you're going to build with new construction or stuff you would even add to. This looks like a refreshed ranch, a brick ranch. We're looking for brick ranches. We'd love to see them dated and beat up. Ideally, we're looking for ones that we can go and we can force appreciation by adding square footage, go up, go back. So again, this is not the kind of market that we're going to go into and find at a level addition style opportunities. There's a somewhat refreshed home here. Let's look for some other zip codes. Let's see if we can't vet. So my Zillow's sticking, guys. Bear with me. It's taking a little bit longer than I'd like for us to get these things to open. So here's another. So 29605. And now we zoom in a bit. So if you see, we're kind of bouncing around inside Greenville County, right? 29601, 29607, 29605. I don't know why that came up twice, but so we're going to jump in and we're going to bounce around. We're going to look, all right, what can we go in at? What's the lower bound of the market? Where can we go in? What can we buy? What does a dated rancher like this cost us going in? This is good, right? Like we're seeing this, it's got an addition to the rear. Like this is a footprint that we could build up on. We could add square footage to it. We see that it's a 3-bed, 1-bath. You can go in at 235. Let's see what else. Let's see what 180 will buy you. Another really straightforward kind of ranch footprint. And then let's see what the upper bound is. What will the market bear if we go up over the existing structure? This looks like a portfolio. That's not what we want. Here's a refreshed 1-story home. This is good. This is helpful to see this. It looks like they're doing, they're actually lifting the house next door, if you guys can see in that image, and they're doing an addition to the back. I can already see kind of an at-a-level style project going on next door. So already this is kind of starting to paint the picture, right? We're seeing where you can go in at 180, 265, 315, and then we're seeing things in the 750s, right? These are interesting. We're wanting to see more. We want to kind of find some more comps that support the at-a-level model that, hey, yeah, you can go in and add square footage because the market will bear it and you'll be compensated for it. So to me, this is a market where I want to go deeper, right? I want to get a better understanding. Clearly, there's plenty of opportunity to buy in at the right price point, right? That 150, 250, maybe even a little bit north of that. Then we want to see where are we selling? Like, how many opportunities are there to trade out over 750, 800, 850, right? Like, if we see enough of that, then we'll go and we'll aggressively market here. This is worth trying to pick up a bunch of opportunities. This is new construction trading at 1.2 when you can buy dirt at 300. That's a good sign. That I like to see. Again, so this is a market that, to me, I know we're going very quickly, right? And I'm trying to get through like a bunch of these, so you guys have a lot of data points, big sampling to draw from. To me, this looks like a market that qualifies for both add levels and additions, and new constructions, I should say. I want to go in there and I want to see, okay, what's highest and best. Anything that I can secure south of 250,000 bucks gives me a bunch of different options. I could build new construction and trade out at 1 million plus, or I could do an addition / add a level and trade out somewhere in the 750 to 800 range. To me, this is an interesting market. This is one I'm going to hone in on. I'll keep jumping around, but question, Pete, how does a third work? What I mean is, suppose the lot is only 50K. Clearly, you can't sell a house for 150. No, there's a lower bound. There's a minimum threshold. Like, you're not going to buy dirt for 50, build a house for 50 and sell it for 150. Although that's not completely impossible, right? Like, there are places where you can buy like slivers of dirt for far less than 50. You can put a like a detached, like an ADU on it, and you might sell it for 150. I wouldn't want to do that. I mean, that feels like a chase, a lot of work for very little reward. Plus, also, I know, Pete, where your market is, so that's not what you would do, right? Like, in your market, everything is high end, and so you would go in and you would pay 5, 6, 7, 800K, and you would sell at 3 times that, just because I happen to know where your market is, and I know that that's what you guys are doing there. What I am asking is, minimum size cost of new build would you even consider? Oh, so there you go. There just isn't a world where it makes sense to do new construction for less than 200 grand. That's just my personal opinion. I know that there are markets where you can do volume. The national home builders who are doing tract, right? They're doing production builds. They're not making 200 per, right? Like, those folks are making less than 100 per, but they're doing 40 unit subdivisions. So they're going to do that. It's quantity, not quality. And they're just going to do a bunch of volume. Can you do a sample in Tampa? Buy dirt for a third, construct for a third. The last third is your gross spread. The last third is the money you should make if you do the deal. It's what justifies putting the money to work. It's what justifies doing the construction in the first place. And we've done a bunch of Florida. We've done, I don't know that we've done Tampa, St. Pete area. We've done Winter Park. We've done College Park. We've done Florida just is hot for new construction. I know that for certain. And there's a lot of places where you can do add levels and make it work. And we could jump into some others. Let me just, I want to close the loop on Greenville. Just make sure everybody has a good handle on what you're going in looking for, right? It doesn't matter that it's like, this isn't your zip code, right? That it's 29605 and it's not 08852, right? Whatever that, it's just semantics. It's all the same deal, right? All over the country, these deals are being done because the multiples work, right? It's not just, hey, this only works in Winter Park, Florida, or Greenville, South Carolina, or Westfield, New Jersey, right? Like, that is not the case. Anywhere where the multiples make sense, it works. So it's about just understanding the ratios, understanding, hey, can I get in at like a third of the ARV and do new construction? Can I get in at 40% of the ARV and do an addition, right? Can I get in at 45% of the ARV and just go up on it? Like, that's what you want to kind of be thinking through as you're looking and you're qualifying your market. Yeah, let's jump into a few others. Here's a couple. So we did a little exercise. Hopefully that's valuable for folks that are in different parts of the country, right? Like, think now about, actually, Alice, if you're still on, what county in Florida particular are you looking to do? And then I can jump in. Middlesex County, New Jersey. I want to show you guys another one. This we just did with one of our newest students this morning. This did Middlesex, the town of New Jersey. I happen to know this because I went through this with him. Middlesex County, New Jersey. So I know that there's a Middlesex in Middlesex County, and so I don't want that to skew what we're doing here. So check this out. Again, think Greenville, South Carolina, Middlesex, New Jersey, right? Palm Beach, Florida, Alice just said, right? Lee County, near Fort Myers, Florida. So think, okay, first let me look at the county as a whole, and I'm just inundated with red bubbles, right? Like it's too much. It's just, there's no way I'm marketing to those thousands, tens of thousands of addresses. What I want to now do is hone in. How do I narrow the scope? Okay, well, with Greenville, we just pumped in a bunch of zip codes. Same thing right now. I don't know these coming in cold. So I would do a search and I would say, what are all the zip codes in X county, right? Google search it, get all the zip codes. Clearly, you guys are going to know the towns, the municipalities. You can get the zip codes in your backyard in the areas that you're going to farm. And now you're going to go one by one, right? Like, so in our primary farm, there are 23 municipalities in the county. We know that 13 of them work for this model. The other 10 don't. So we don't even consider the other 10. We don't market to the other 10. Anytime a deal comes in any of the other 10, it's completely, it's a hard no, right? It's a hard stop. It's a non-starter. We don't even look at it. Think about how much mind share that buys you back, by the way. So now we've got, I'm going to do this exercise quickly in Middlesex. Again, we just did this one this morning. So happy to do this again to kind of show you all what we do alongside our students. Like when they first come in, we want to qualify a market, make sure that they're focusing their efforts on the right opportunities. So all I'm doing is taking a few zip codes, and I'm not even sure that these were the ones we looked at together, or these, right? Quickly grab 4 zip codes. And of course, we're doing this quick, and I'm trying to do a bunch of different markets for you guys. Like I said, again, so you have like a breadth of data that you can kind of think through. But more importantly than the zip code or even the numbers are like the thought process behind how to look at it, and then the ratios. A couple of questions as this loads. Again, this takes a while, guys, too, right? Like I'm doing this on a live stream, on a webinar, navigating through the internet. This is clearly a little bit clunky. You would be doing this at home on your machine, or I'd be doing it with you. You'd be driving, right? So it'd be a little bit more streamlined. But anyway, as these zip codes are loading up, these are 4 separate municipalities in this county. Now we're trying to like hone in, right? A couple of questions while we're doing that. If you don't see multiples on for sale on Zillow, do you write off the location and go look for new zip codes to try and dig further into the solds, or look into MLS if possible? Yeah, that's a good question. So I wouldn't immediately write off a location because I don't see a lot of stuff for sale. I would use for sale and solds to kind of gauge those deltas we were talking about, where we can go in at, where we can exit at. I'm going to use Zillow for that. What I'm also going to use Zillow for, which it's really good for, better, well, I shouldn't say better than MLS, but you don't need MLS to do it, is I'm going to look at days on market, right? And so we didn't get that far with Greenville and the South Carolina market, but I know that after doing this research, we found one municipality, one zip code in particular, where things were so hot that the days on market were 30 or less days. So that's telling me, hey, like, there aren't a lot of things selling, but the things that are selling fast. That means inventory is constrained. There's more supply than there is demand, vice versa. There's more demand than there is supply. I want to get into that market. I want to be buying direct from the seller. I want to go direct to seller, buy, either refresh it, add square footage, tear it down, build new, and sell quick, right? Because the market is hot. There's not enough inventory. So don't be discouraged if you don't see a lot of red bubbles, right? Like, in fact, that could mean that there's opportunity. And I know that that's true of a lot of our students because of the deals that they're doing and they're pre-selling. So excuse me. In fact, we just shared a story inside of the Fix and Flip Foundation group of one of our students who just sold pre-construction with the foundation in and the first floor deck down, not a single wall up. And he pre-sold somewhere around 1.65, 1.7 in a really hot market for a property he purchased in like the mid fours. So I'll let you guys do that math, right? That's $1.5 million or $1.2 million gross spread before backing out cost of construction. And it doesn't cost 1.2 million to build a 3,000 foot house. So is it a good rule of thumb to simply follow where other developers in X county are developing micro neighborhoods they've chosen? Would this steer you wrong or a good move? It's a great move. That's the big guys have already done the research. So one of the beautiful things about like infrastructure, for example, is someone's paid a lot of money to do a lot of research to figure out where the crowd is headed, skate to where the puck is going, right? Wayne Gretzky. So they already know. So if you've ever been somewhere and kind of driven out to the end or what seems like the end of a road and seen gas stations and fast food chains and Sonesta suites and wondered who the hell's coming out here? Trust and believe that the research has been done and everybody's headed that way. And that's why those players are getting that prime real estate right out there. And that's a good way to like kind of migrate out in that direction. Same thing here. If you see a lot of development happening within reason, right? Like you don't want Toll Brothers to be putting up 1,000 units, right? Like that's saturation. You don't need the national players to be like stamping out houses. That's not necessarily good. But to see a bunch of like smaller players like us doing the type of stuff we're talking about today, that is good. So yeah, that would not steer you wrong. In fact, that would be a great move. What per square foot build cost do you underwrite at? It depends on size and out sale. Yeah, that's exactly right. It depends on market as well. So what it costs to build, again, Pete, I know where you are. It costs you the same thing it costs us to build, and you already know the numbers. But there's folks in Texas that are building for half that, right? So different parts of the country, parts of Florida are probably 2/3 of those number, like of our number. So yeah, hopefully that's helpful. Tom, 120 to 130 as a baseline in New Jersey. Yeah, that's and so Tom, also you should say, or you could also say like as a GC and someone running projects tight, you're uniquely positioned to do things at that price point. So that is a really good number. If there's a Whole Foods and a Starbucks, buy. Spot on, Alice. Anytime that they're ahead of the curve. Here's, okay, so I'm going to quickly run through this one. And so again, we're looking at Middlesex County. It could be any county anywhere in the country. And then we're picking individual zip codes inside of that county. We want to get a handle on what the upper and lower bound is. We're going in and we're seeing what's for 455 by us. Right. So this is 08824 zip code in Kendall Park inside of Middlesex County. I'm looking at a dated ranch. I'm looking at a busted up driveway. I'm looking at really old, crappy curtains and bathrooms and kitchens and really straightforward floor plan to build up on. So to me, this is interesting. So that's what 455 gets me on market. I want to be mindful that I'm going to go off market, right? I'm going to curate my own list and I'm going to go off market. So my hope is I'm going to buy cheaper than that, but maybe I buy on MLS, right? Like there are opportunities to do that as well. What's the upper bound? If I bought at 450, what can I get? So this is, I would say slightly smaller, or this is comparable to what I could turn that house into. So for me, this is starting to look like my upper bound. All right. It's a little dated. So I want to model, it's got a pool. So that's going to factor into my comps. So I'm seeing 980. And if I break out the calculator, so this is that exercise. Maybe this is a better way to drive that home, right? So if I'm buying for 455 and I need to know what do I have to sell for to make this make sense. If I go in at 455, we divide by 0.4, 40% of ARV. We need to sell at 1.137. So I don't see 1.137 out sales here. I see 979, I see 950s, and then I see a bunch of things sub 1 million. So what that tells me is like the delta is there, but it's not all the way there, right? Like we're not too far off. If I can go direct to seller and buy south of 400 and I can turn out a quality product and push 999, now we're right there, right? So a lot of it has to do with where you go in at. So I would say this smaller little subset of Middlesex County is worth farming, but I know that I'm going to need to get it at the off-market price. I'm going to need to get it at the direct to seller discount price to make it work, because otherwise the spreads are too thin. Here's another one, zip code 08840. Same thing, like we're looking for these deltas. We're looking, okay, what do those capes and ranches trade for? Are they in the fours? And then can we sell in the million range? So here's a small brick cape trading at 415. If we break the calculator back out, right, just we'll keep doing the math just so folks can see, divide 0.4. So, okay, 1,037,000. Let's go back and see, okay, so if we can get this brick cape at or below asking, does the market bear over 1 million? Okay, here's a comp. Here's a 6-bed, 6-bath, much bigger house than we would build on this footprint, right? So that's not really a comp for us. This is terrible photography, totally unrelated, but whatever agent has this listing should be fired. This is terrible. 3-bed, 2-bath, 1,000,001. There's another house to go up over. But again, we're seeing a lot of things at or around 4, and then the upper bound is looking like it's below 1 million. These over 1 million they're kind of anomalies. They're not the reassuring comp that we want to see. So for me, I would say this is a town kind of worth farming, but not something I'm going to fully commit to. I would look for a really great opportunity here, something that you could steal at sub 400, but this is nothing. There's not as much opportunity there as there is here. Okay, let's keep jumping. A couple of questions. What is 120 a square foot? We would be happy to pay twice that all day. Tyler, where are you building? California or Connecticut? There's parts of the country where, of course, guys, that's why we do this, right? I remember being introduced to this concept of materials pricing, like varies throughout the country at the Home Builders Show a few years ago in Orlando, where they won't speak to you unless they are your regional rep. And so if you come into a booth like the Hardy booth, for example, and you want to understand what does Hardy cost in my market, the rep from the Midwest can't talk to you if you're from the Northeast. They'll ask you where you're from, and then they'll find the rep that sells into your market because the pricing is different. It just is. And they don't want to tell you that. So they have like the specific rep that serves your market speak to you. And so that might be the case. Like in parts of Jersey, Tom and I and some others may be able to bill for 120, 130, 150. And then wherever Tyler is and some of the other folks might be building at 250 or north of that. Neighborhoods where you can buy an older ranch for 1.4, resell for 3 to 3.5. You would probably not assume 150 a foot, right? That market demands luxury finishes, 300 a foot. 300 a foot is custom beyond luxury. 300 a foot is a pretty significant amount of money to spend on a build. You would be doing custom inlays. You would be doing custom like trim. The trimmer would have to live there. At 300 a foot, I'm exaggerating a bit, but that's like, you're not doing high-end finishes. You're doing like tricked out, custom, unique, like buyer specific type finishes. In my opinion, at 300 a foot, knowing what I know about your market. So let's keep going here. First blush, I don't love anything I see, right? Like here, everything seems to be clustered at 4 or 5. Like there is nothing, there is no upper bound here. Everything in this market looks like it's trading at the same price. So that's not very promising for us. And this is one where like I could click into a couple of these bubbles, but I already kind of know what we're going to find. So for your purposes for the exercise, I would say, yeah, click in, kind of look around and say, okay, let's see what 400 buys me. And then let's go look at what like the most expensive thing to sell in town looks like. And it's not going to be justified, right? Like if we were going to pay 400 for that, and what's 900 is it's not even a house, it's a commercial, right? So like you're trying to find, like, if I'm going to pay 400 for this, I got to find something in town that trades for over $1 million. And when you look at these numbers, there's nothing in town over $1 million. So I would say that zip code 08830 does not qualify. And I would probably non-starter for me. Don't send me any deals in this market. I don't want to, schools probably aren't that great. Things probably sit on the market forever, right? We won't go into all that, but I can probably assume that to be true. And I don't want to do deals there. Viviana, do you have a construction background? Did you learn as you started with the real estate world? I would say I had a very basic understanding of construction. And I learned a lot of what I'm talking about today the hard way. And so hopefully I can help you guys alleviate some of those pains, those learnings. So here, Highland Park, zip code 08904. Here's this tiny little cape, needs everything, 1960s, right? We're looking for 50s and 60s. This thing needs everything. All right, so if we can go in at 370, that's on market. Remember, like we're trying to do a qualify on market exercise, but we also want to know, or we also want to be conscious that, hey, maybe I go direct to seller because I'm not just looking for these, I don't know, 12 listed properties. I'm going to curate my own list and I'm going to mail to 400 or 500 addresses in this town looking for these 370s, but offering 320. So just be conscious of that too. I don't want you to completely discredit a market because of something like that. So it's good to see this kind of delta, right? In Highland Park, like we're seeing stuff for whatever reason. This one doesn't want to play ball. So we're seeing that like this is a monster house. So this isn't necessarily a comp, but I like that there's deltas that are significant enough that are worth looking. 138 days on Zillow. This is someone selling something new construction, pre-construction, paid for the dirt, 110, listed for sale, 770. So like, you don't have to be a genius mathematician to know that this is a killer deal, right? Like paying 110, you could pick whatever number you want per square foot to build this house. It's a 5-bed, 4-bath. Chances are it's 3,000 feet or less. Pick a number, right? 150 a foot. 3,000 feet, that's 450,000 on top of the 110 purchase, 560 with a 770 ARV. That's a good deal. That's a 200K net profit rehab or new construction, I should say. So let me jump out. We're approaching 145. That flew by. That was quick. Hopefully this was beneficial. We've done versions of this before, guys. So if you need more like data points, you want to see this having been done before. We didn't get to Tampa. We didn't get to St. Louis. There were a bunch of others that we wanted to kind of look at together. And I just knew this was going to like bleed into the full call. This is why we do this with you guys. As soon as you come on board, it's like the first exercise that we do together to make sure that you're farming a market that makes sense. But hopefully if this did, the one thing I was hopeful this would do for you is kind of help you craft how you think about these opportunities. So I wanted you to kind of look at these markets with the blinders off and say, okay, like, can I go in at 200, 300, 400, whatever the number is in my market, and can I get out at 2.5 times that? And if there's that spread there, let's go deeper. Let's start looking at individual opportunities in that market. Let's look at the solds as well as the for sales, and let's see what's trading. Let's also see how long things are sitting. Let's see if there's only like 5 or 6 active listings, but they all trade in 2 to 3 weeks, right? Like that's good. That's where we want to be. Again, yeah, these are great. I love these trainings, and hopefully we're bringing you guys value and you're enjoying them as well. Any questions, hit us up offline. I see a lot of familiar faces. I'm happy to see a lot of you guys, Ed, Tom, Alice, Pete, right? A lot of folks that I've talked to offline. So happy to see you guys here, and looking forward to seeing you guys on the inside soon as well. And anything, hit us up. Happy to connect. Happy to do more of these trainings. If you like these trainings, let us know, and I'll keep bringing you more of these like tactical type trainings, and we'll get away from the decks, right? Like putting those slide decks together is a little bit arduous, and doing this is a lot more fun. So let me know if you want to see more of these trainings. All right, guys, have an incredible rest of your day. Crush the balance of your week. And I'll close this how I often close our accelerator calls, right? Model deals, write offers, buy houses, but you can't do the third one unless you do the first one. So start modeling some deals, then you'll write some offers, and then you'll ultimately buy some houses. All right, guys, have a great day.